Hi students, how are you? So today's lecture is very, very important because it deals with International Accounting Standard 16, which is called IAS 16, Property, Plant and Equipment. And the important thing which I am going to discuss with you is the treatment of depreciation. Depreciation is something which is the most important topic in this standard. And according to IAS 16, the definition of depreciation is the systematic allocation of the depreciable amount over the useful life of an asset is called depreciation. And how do we charge depreciation? We have got two methods under IAS 16. One is called straight line method, and the other one is called reducing balance method. In a straight line method, we charge same depreciation over the useful life of an asset. And this method is suitable for those assets which are evenly used up over the useful life. Let's suppose take an example of furniture and fixtures, building. So we make the use of these assets evenly over the useful life of asset. So that is why we charge the straight line method. So we charge a depreciation rate, and we keep on charging that rate on the cost less residual value in order to calculate the annual depreciation. And when we talk about reducing balance method, then we say that this method is suitable for those assets which are used more in their earlier years of life and used lesser in the later years of life. We can take an example of a car, of a machinery. So we know that we use these machineries more in the earlier years of their lives, and we use lesser in the later years of their lives. So let's have a look on the accounting treatment on the that how do we charge these depreciations. So for that purpose, we will use Excel, and I need to open my Excel file. So it's quite simple, and that is how you will be tested in the examination under paper F3 of ACCA or under any financial accounting course. So let's suppose we have got a question that a business has furniture worth, let's say, $100,000 with a residual value dollar 4,000. Sorry, let's say 10,000. The business expects the useful life of this asset to be, let's say, 5 years. So here we got three important variables. One is the cost of the asset, which is $10,000. Sorry, $100,000. The residual value. What is residual value, by the way? The residual value is the value. It is also the expected value which we get after the useful life. Let's suppose we have got the useful life 5 years. So after 5 years, when we make the use of the asset, we will be left with $10,000 as a residual value. So we have got the useful life of 5 years. Okay. So we are required to prepare the depreciation schedule. And let's suppose we are also provided the depreciation rate in the question. Depreciation rate. And remember, this will be always provided in the question. So I am changing the color of this cell so that you might understand that this depreciation rate is always provided in the question. So here we will make a depreciation schedule. We have got years, we have got cost, we have got annual depreciation, we have got accumulated depreciation, and we have got net book value. So students, just pay attention that how do we find these variables. So we have got 5 years, 1, 2, 3, 4, 5. The cost of the asset is equal to $100,000. and it will remain same because cost never changes over the useful life of an asset. So how do you calculate the annual depreciation under a straight line method? So let me tell you one thing, that we are following here the straight line method, because the asset is furniture, and straight line method is the best method for the furnitures. So just pay attention. How do we calculate the depreciation under straight line method by using the depreciation rate? First of all, we will consider the cost. Then we subtract the residual value, which is $10,000, and we multiply it with the rate of depreciation, which is in this case is 15%. Is it clear? So first of all, you will take the cost, you will subtract your residual value from the cost, and then you will apply the rate of depreciation. That is how we get the depreciation. And every year this depreciation remains same because we are following the straight line method, and in this method the depreciation remains same over the useful life of the asset. So in the first year the accumulated depreciation will be 13,500 here, and the next year you will add up more, because accumulated depreciation means you keep on increasing your depreciation, you keep on accumulating the depreciation. So you will get the total accumulated depreciation in this way, and finally you find the net book value. And how do we find out? We just subtract the accumulated depreciation from the cost. I repeat, when we subtract all the accumulated depreciation from the cost, we get the net book value. So that is how we will find the net book value of the asset. So that is how we follow the straight line method. Just pay attention, revise the video, watch it again and again to understand how do we proceed with the depreciation calculation while following the straight line method. So the second method is what we called is reducing balance method. Reducing balance method. And in this method, the important thing is that we charge depreciation on the net book value. So we calculate the annual depreciation by following the formula, which is called net book value multiplied by rate of depreciation. Okay. So let's suppose we have got a question. Let's say a business has a car worth $40,000. The business follows reducing balance method for cars and applies 20% depreciation rate. Requirement is prepare a depreciation schedule for 4 years, let's say. Okay, so here we got the years, cost, annual depreciation, accumulated depreciation, and finally we have got the net book value. So now you have to observe that how I am solving this question. So we have got the years 1, 2, 3, 4 simply, and we know the cost is always constant, and in this case the cost of the car is 40,000. So students, just pay attention. In the very first year we do not have got any net book value, so you will apply the depreciation rate while following the reducing balance method on the cost of the car. And here we have got 40% multiplied by 40,000 multiplied by 20%, or you can write as 20 divided by 100. So this will be your annual depreciation. It will be your accumulated as well. And how do we calculate the net book value? We will consider the cost less accumulated depreciation. But in the next year you will take the 20% depreciation of this 32,000, the net book value. So take this 32,000, get it multiplied by 20%, you will get the depreciation of the next year. And again, you have to find out the accumulated depreciation by adding up the depreciation with the existing balance. And here you will subtract your accumulated depreciation from the cost, and you will get the net book value of the next year. So in the next year, you will take the depreciation percentage of this amount, which is called your net book value. You see? And now you will calculate the net book value, and finally you will subtract your accumulated depreciation from the net book value. From the cost, you will get the net book value. And in the very next year, you will again consider this net book value. You will take the 20%, you will get the annual depreciation, and again you will find the accumulated. And finally, once you subtract your accumulated depreciation from the cost, you will be left with net book value. So just have a look on this particular column. You must be noticing that your depreciation, annual depreciation, is reducing every year. So that is why we call it reducing balance method, because we keep on reducing our net book value. We keep on charging the rate of depreciation on that reduced net book value, and we keep on calculating the annual depreciation. So dear students, just repeat these calculations again and again in order to have better understanding regarding depreciation, and be prepared for the quiz. Thank you very much. God bless you.